Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings and let you know if the Emperor is wearing any clothes. Today, we're diving deep into Society Pass, Incorporated, a company that is building a digital world in Southeast Asia. But is it a futuristic kingdom or a house of cards, this S1 filing is packed with numbers, risks, and some seriously complex legal battles. So buckle up because we're about to decode it all before we start. If you appreciate getting straight insights from corporate documents like this, make sure you are subscribed and hit that notification bell. We also have a fantastic Discord community linked in the description below where we break down these filings even further so you can stay ahead of the curve. Society Pass Incorporated is making a bid for more public funding with this S1 registration statement amendment. They're looking to raise capital through the sale of common stock and some interesting pre-funded warrants which essentially let investors buy shares now at a slightly lower price than the initial offering. This offering is a big deal for them, aiming to bring in potentially over $9 million after fees and expenses. But here is the kicker, and this is crucial. This is a best efforts offering with absolutely no minimum amount of securities required to be sold. That means they might sell very few shares, and if they don't sell enough to fund their grand plans, investors might not get their money back. This is a huge risk and something every potential investor must understand. Now, Society Pass Incorporated is juggling a few statuses here. They're an emerging growth company and a smaller reporting company. This means they get to take advantage of some relaxed reporting rules, which in plain English means less required disclosure for us. Investors, this can make it harder to fully understand their financial picture. Let's talk about NASDAQ. While their stock is listed on NASDAQ SOPA, they've had some near-death experiences with compliance. They were actually facing delisting due to not meeting minimum stockholders' equity requirements, but in September they showed compliance and are now on a mandatory panel monitor for a year. This is like being on probation. If they slip up again, NASDAQ could delist them, which would seriously hurt their stock's liquidity and value. The risk factors section reads like a financial soap opera, and it is honestly the most important part of this filing. They're upfront about needing more capital and the risks associated with not getting it, saying failure to raise capital when needed will have a material adverse effect on the company's business financial condition and results of operations. They also admit they rely heavily on internet search engines and app marketplaces like Google and Apple, which can change their algorithms anytime, potentially dropping Society Pass down the search results and hurting their traffic. They also point out they're in a super competitive e-commerce space and may not have enough resources to keep up with marketing, sales, and customer support efforts compared to bigger players. This is a big concern. If they can't keep pace, their business could be in serious trouble. Now, for the exciting part, Society Pass Incorporated is expanding into AI-driven data centers and telecom companies. This is a bold move, but they admit they have limited experience in these new sectors, and integrating acquisitions could be complex and costly. It is a high-stakes gamble. These new ventures in AI and telecom are not in a friendly neighborhood, legally speaking. They're facing different rules in Southeast Asia, Europe, and North America. Any misstep in complying could lead to fines, operational headaches, and damage their reputation. And for those already holding stock or considering it, be prepared for a roller coaster ride. The stock price they predict is volatile due to many factors, including their own performance analyst estimates and even negative publicity. This is not for the faint of heart. This is a major red flag. Their own auditors raised substantial doubt about their ability to continue as a going concern. They need more funding to keep the lights on. So basically, they are admitting they might run out of money. Their ability to continue as a going concern will require us to obtain additional funding. Looking at recent events in December 2025, they did conduct a best efforts public offering, raising about $2.5 million after fees. But as part of that deal, they had a standstill agreement, meaning they promised not to issue more stock until March 2026. However, they've already waived that, with some investors granting them participation rights in future financings. This shows they are constantly needing to fuel their operations through these types of deals. In January 2026, they made significant investments in Gorilla Networks Pte Ltd, a telecom company, and Sapience I Incorporated, an AI data center. This shows their strategy of expanding into these new sectors is actively happening, but it is also a huge financial commitment funded partially by cash and partially by newly transferred Nusatrip shares, which is an interesting way to pay. Okay, let's get to the numbers. This is where we see the real story. As of the 30th of September 2025, Society Pass had about 6.6 million in cash and cash equivalents, but a staggering amount of over 18 million in deposits, prepayments, and other receivables. This looks like a lot of money tied up somewhere, which might explain why their operating cash flow is negative. At over $22 million for the 9 months ended September 2025, that's a lot of cash burned. Their total liabilities are over $19 million, putting them in a precarious position. The shareholder deficit is also concerning, over $13 million. Now, for the income statement for the 3 months ended the 30th of September 2025, revenue was about $1.4 million, which is down from the same period last year. But look at their gross income, which jumped to over $887,000. This is a huge improvement from last year's gross income of $365,000. This is mainly driven by their digital marketing and ticketing businesses, which have higher profit margins. However, that gross profit is quickly swallowed up by operating expenses, especially general and administrative expenses, which shot up to over $5.9 million for the quarter, leading to a net loss of over $5.2 million for just 3 months. That is a lot of red ink. When you look at the 9-month period for 2025, the net loss attributable to Society Pass Incorporated is over $6.4 million. This widening deficit, despite increased gross profit, highlights the ongoing struggle to control costs. Jumping to the yearly financials as of the 31st of December 2024, their cash and cash equivalents were about $7.6 million, but total liabilities topped $23 million, their shareholders. Deficit is also a significant number at over $2.4 million. This is not a picture of financial health. And the yearly net loss is even scarier at over $10.2 million for 2024, compared to a massive loss of over $18 million in 2023. While the loss decreased, the sheer scale of it is concerning the decrease in general, and administrative expenses is a positive sign, but it is not enough to offset the overall losses. Scroll revenue 700 and 530. Year total revenue for 2024 was around $7.1 million, down from over $8 million in 2023. This revenue drop is largely attributed to a decline in online ticketing and reservation, as well as online ordering businesses. This shows their core businesses are facing headwinds. Now, for the auditor's report, this is where they explicitly state what we've been seeing. The accompanying financial statements have been prepared assuming that the company will continue as a going concern. As shown in the financial statements, the company has suffered a net loss of $10,237,297. Working capital deficit of $8,754,740 and total shareholders deficit of $2,412,705 as at the 31st of December 2024, that casts substantial doubt about its ability to continue as a going concern. This is a strong warning label to investors, and it basically means the auditors are saying they're not sure the company will be around in a year without more money. Looking at the liabilities and shareholders deficit section, we see the company's precarious financial situation. The total liabilities are over $23 million, while the total shareholders deficit is over $2.4 million. This means the company owes far more than it owns, which is a classic sign of financial distress. The non-controlling interest is also over $270,000, indicating parts of the company are owned by others. And then there are the legal battles. 2 former employees, Rahul Narain and Thomas O'Connor, along with a company called CVO, are suing Society Pass for millions of dollars in an employment action brought by Thomas O'Connor and CVO. A court found O'Connor was fraudulently induced to enter agreements and ordered the return of shares issued. The court also awarded O'Connor approximately $12 million in damages. This is a massive and concerning legal loss. Interestingly, even with all these financial and legal troubles, the executive compensation still looks pretty high for 2025, Reinaud. Liang, our CEO, is set to earn over $2 million. Tanya Shong, the CFO, is slated to earn over $300,000. This level of compensation for a company with such significant going concern issues and legal troubles is something to note. So what is the story here? Society Pass Incorporated is a company with big ambitions in the rapidly growing Southeast Asian market. They're making bold moves into new sectors like AI and telecom, and their digital marketing and travel businesses show some promise with improved gross margins. However, the financial reality is stark. They're burning through cash at an alarming rate, and their auditors have serious doubts about their ability to continue as a going concern. The recent $12 million judgment against them is a massive red flag, and their reliance on constant financing from public and private offerings is a risky strategy. The company's direction is clear expansion and growth. Their strengths lie in their diversified business segments and international presence, but their weaknesses are glaring financial instability, high operating costs, and significant legal challenges. The fact that they're still offering shares with no minimum requirement, and investors might not get their money back if the plan fails, is a huge risk. In conclusion, Society Pass Incorporated is an extremely high-risk speculative investment right now. While the vision is big, the execution and financial discipline need serious improvement if they want to truly build that next generation digital ecosystem. The company's future hinges on their ability to secure substantial funding and navigate these immense legal and operational challenges without faltering. There is a significant chance investors could lose their entire investment. The company is in a very risky position. Alright, that is our deep dive into Society Pass Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Is it a risky bet or a diamond in the rough? Let us know your thoughts in the comments below. If this breakdown was valuable, hitting that like button really helps us out. And of course, subscribe for more corporate deep dives designed to help you decode the world of business. Don't forget to check out the Discord server linked in the description for more exclusive content and discussions. Thanks for watching, and we'll see you on the next Corporate Decoder.